Hello everyone, welcome to the Financial Information channel. My name is Marvin. In this video, I am going to give you the information about the IQiyi stock. But before I start the video, remember I do videos about the stock market, personal finance, and how to make money online. So you can click on the subscribe and the notification bell. And this video will provide you an information about the company. I'm not a financial advisor. Make sure that you do your own research before investing in this company. So I'm going to be doing a review on the IQiyi stock that is located in China. It is known as the Netflix in China, so I'm gonna break down their business and their numbers. But now let's begin first with the CEO, and the CEO is Tim Gong-ju. He founded the company in 2010, and IQiyi merged in 2013 with another company named PPS, and after that merger, IQiyi became the leading video platform in China. Now, one of the interesting facts is that IQiyi became one of the first and the only one at this moment to have the DRM in China. And the DRM is important. You want to protect your content against piracy. In addition, having the DRM is going to attract new studios to sign deals with IQiyi. And the reason why they want to do that, they want to stream their content and their movies in China. And having partners is a key part of any company. And as we see on the screen, JD.com and IQiyi reached an agreement, and that is a huge benefit for both companies. The agreement between JD.com and IQiyi is going to allow each member to link the membership programs for both companies. And just to give you an example how that works, it's like Costco having an agreement with Netflix. And if you end up having one of those two memberships, you're going to be able to enjoy the membership benefits of either company. And just keep in mind that Netflix at this moment is not able to stream their content in China. However, even Netflix reached an agreement with IQiyi, and that agreement is going to allow Netflix to stream its content in China. And that unique content from Netflix includes the Black Mirror, Stranger Things, and Mindhunter. But in my opinion, one of the biggest partnerships is between Baidu and IQiyi. Baidu owns around 80% of the IQiyi shares. Now, Baidu is the #1 search engine in China, and the reason why that is important is Baidu is one of the world leaders in artificial intelligence, and we know one of the special elements that has made Netflix popular has been artificial intelligence. So by having Baidu one of its major stakeholders, it is going to allow IQiyi to have an edge on the competition. And as you can see in the screen, another advantage is that this company has been able to reach agreements with several US companies. For example, Lionsgate has been able to reach an agreement with IQiyi. And IQiyi has other companies in addition to Lionsgate. It has 20th Century Fox, NBC Universal, and Paramount. But now let's take a look at some of their numbers that the company reported at the end of the fiscal year in 2017. And as you are able to see in the screen, the company announced 50.8 million subscriber members and around 421 million mobile monthly active users. And most of its members spend around 1.7 hours per day. And another key number that you can see is 126 million daily active users. Now, we were able to see some of the subscriber numbers, and those numbers have increased throughout the years. Just back in 2015, the company only had 10.7 million subscribers. And just in 2016, that number increased to 30.2 million subscribers. That is around 182 year-over-year growth. And in the fiscal year of 2017, the company announced 50.8 million subscribers, and that is around 68% year-over-year. Now, one of the key differences between Netflix and IQiyi is that Netflix only has monthly subscribers, and that basically means that those subscribers are going to be able to pay a monthly fee. And the IQiyi business is a little bit different. It has a 50-50 split, and that means that members are able to buy the membership if they want to. And the other way that the company generates money is through advertising. And just to give you an idea, this company is only 8 years old. In the latest numbers, the company reported to have at least 61 million subscribers, and those subscribers are the ones that pay every month. And when you compare that number to Netflix, Netflix has at this moment 125 million subscribers. So it is catching up really fast, and that gives you an idea how the China video platform has been increasing throughout the years. Now, one of its biggest cons is that this company is not making money at this moment. Now the company had a huge profit last year. It went up over 2.7 billion in 2017, and that was around 52% over the previous year. However, at the end of the year, it lost 574 millions, and those numbers are in terms of US dollars. But just like I said, the sector has a huge potential. So just like you see in this graph, the revenue of China online video sector from 2011 to 2019 has gone up dramatically in the last few years, and it is supposed to increase in the double digits in 2019. It's supposed to rise around 29%. And in terms of video advertising revenue, from 2018 to 2019 is supposed to increase around 18%. And even though that number might seem low, it is an additional income that the company can benefit from. And the last graph that you will see is the revenue structure of China online video sector. You can see that the video value added services is going to be increasing from 31% in 2018 to 38% in 2019. And the last numbers that you will see in the screen, at the end of 2017, China had around 731 million internet users. That is more than double of the US population in terms of internet users. And that number is only 30% at this moment in China. So that number should continue to increase in the next few years. Now I'm gonna cover the fundamentals really quick, but keep in mind this company became IPO in March 26 of 2018. So it doesn't have a lot of history, and that's one of the risks. But now let's take a look at the fundamentals. And as you can see at this moment, the stock price is around $29.26, and it has a really good market cap. Even though that it just came out a few weeks back, it has a market cap of around 20 billions. And in terms of price to earning, it doesn't have price to earning at this moment, but it has a negative price to earning. And the reason is that it's losing money at this moment. So the forward price to earning is negative 4.30. And the profit margin and the operating margin are negative as well. So once this company becomes positive, it's gonna look better. In terms of the revenue quarterly growth, it's around 48%. In terms of its balance sheet, it has around 142 millions in cash and around 108 millions in debt. Now in terms of its negative for this stock, it is losing money at this moment, and just like I mentioned before, it lost around 474 millions in 2017. However, when the company reported earnings during the first quarter, it improved that number. It lost only 63 millions during the first quarter. So that is the first negative about this company. And the second negative is that the company has gone up so much. At this moment, the company has gone up over 88% in 2018. So basically, the company hasn't had a huge pullback since it became IPO in March. And the reason why that is important, you want to see how the company reacts when things don't go perfectly. And another risk that I see in this company is having huge competition between Alibaba and Tencent. Tencent has the number 2 video platform in China. And the number 4 risk that I see in this company is that it has a lockup period in terms of its shares. And lockup means that it's going to allow its investors to sell the shares after a certain date. And that date for Iqiyi is going to be on September 25th. Now keep in mind that Baidu owns around 80% of its shares. So I don't know if Baidu is going to sell those shares during the lockup period. We will have to wait and see. But what do I think about Iqiyi? Iqiyi, in my opinion, has a huge potential. Now one huge advantage is that the company only focusing in video. When you talk about Alibaba and Tencent, they have different ways that their business are structured. For example, Alibaba have their e-commerce business and Tencent have their video game business on the side. Now in terms of myself, I don't have any shares, or I don't plan to buy any shares in the next few days. But as a huge disclaimer, I ended up buying call options that are gonna expire in 2019. And for me, I would be overpaying if I was able to buy shares at this price. So in that sense, getting call options at this moment make more sense to me. Now keep in mind, this is not a financial advice, and if you plan to trade shares from Iqiyi, make sure that you do your own research before investing in this company. And that is gonna be everything for this video. Please leave in the comment sections below, what do you think about this company? Do you think that it's gonna be better than Netflix, or that is going to fade in the next few years? And remember, I'm gonna continue making videos about the stock market, personal finance, and how to make money online. You can click here to see another stock market video from this channel, or right at the corner to see another video from this channel. And as always, I want to thank you once again for watching the video. Have an excellent day and take care, my friends.